But the reason really that we see the price of gold rise is we're looking at it by standing on our heads. We're looking at it completely the wrong way around. It's our currencies falling. And I tell you, the foreigners understand this in increasing quantities. So this mechanism is going to increase the pressure on fiat currencies in the coming months, which will be reflected in a fall in the value of fiat currencies, measured in real international legal money, which is gold.
The current scenario in the global currency markets is nothing short of fascinating, revealing a significant shift in dynamics. According to Alasdair Macleod, foreign entities, perceiving a shift in market conditions, have either slowed down or halted their purchasing of dollars at the previous rapid pace. Consequently, this slowdown has exerted downward pressure on the dollar's value. This slowdown is particularly noticeable in America, where foreign central banks, notably those of China and Japan, the two largest holders of U.S. Treasuries, seem unable to continue their previous buying spree. In September and October 2022, Japan's Treasury holdings experienced a significant decline of $131.6 billion from $1.196 trillion in August. Similarly, China's pile of Treasuries also decreased in February, falling to $775 billion, marking a monthly decline of $22.7 billion, the second largest among the 20 major countries on the Treasury's list. The downward trend in Japan's currency has prompted the country to sell dollars and U.S. Treasuries to bolster the yen, resulting in Japan taking a step back from the market. Contrastingly, reports suggest that China is actively purchasing gold, with its gold reserves reaching 72.74 million ounces by the end of March, marking the 17th consecutive month of growth, according to data from the People's Bank of China, PBC, the central bank. However, Alasdair sees that China's primary action is selling dollars, not gold. Historically, interventions occurred to suppress gold prices when the dollar faced challenges relative to gold. However, such interventions seem absent this time, likely due to a scarcity of physical gold. Bullion banks, typically long on dollars and short on gold, find themselves heavily short on gold. This shortage extends to the entire system, with only ETFs providing some relief. As a result, the dynamic of selling dollars and shorting gold is pushing the price of gold higher, driven by the declining value of currencies, particularly the dollar. We will present clips from Alasdair Macleod's interview with Silver Bullion TV. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
This is an interesting situation. This is really telling us that the foreigners have slowed down at the very least, or stopped buying dollars at the pace at which they have in the past. That is why the dollar is going down. Now, you can see that with the way the debt trap is developing in America, you can see that foreign central banks, I mean, particularly China and also Japan, who are the two biggest holders of US Treasuries, either are not in a position to buy US Treasuries. I mean, in Japan's case, they've got a currency which is tanking, and what they want to do is they want to support the currency. And you support the currency, how? You sell dollars and you sell US Treasuries in order to buy yen. So, the Japanese are out of it. So where's China? Well, I mean, China has been doing exactly what I've just described, except we think it's the other way around. China has, according to us, has been buying gold, adding gold to the central bank's reserves, PBOC's reserves. But it's not buying gold, it's selling dollars. That is the key. If you understand they're selling dollars, then you can see everything begins to fall into place. Now, the other thing you've got to look at, in the past, when there has been a problem with the dollar relative to gold, various agencies have stepped in and suppressed the price of gold and taken the panic out of the market. So why they're not doing it this time? Well, I think the answer is basically nobody has got gold in order to sell gold and buy dollars. I mean, if you look at the situation of the bullion banks, they are so long dollars and so short gold, they can't go short anymore because, you know, they're getting into financial difficulties. I mean, if you look at the short position on COMEX with the swaps, which is mainly bullion banks, we don't know what the position is in European banks which offer unallocated gold accounts, because an unallocated gold account is basically a fractionally reserved gold account, which basically means that at the end of the day, the bullion bank is short of gold. So, you know, the whole of our system is short of gold. The only stuff that's coming out is from ETFs. And I guess that's slowing down a bit too. So you can see that this is leading into a very interesting situation. But the reason really that we see the price of gold rise is we're looking at it by standing on our heads. We're looking at it completely the wrong way around. It's our currencies falling. And I tell you, the foreigners understand this in increasing quantities. So this mechanism is going to increase the pressure on fiat currencies in the coming months, which will be reflected in a fall in the value of fiat currencies, measured in real international legal money, which is gold.
In 2024, the price of gold has experienced a remarkable surge, with gold futures rallying by an impressive 14.49% since January 2nd. This surge has propelled gold's price per ounce to unprecedented levels, reaching a new all-time high of $2,160 in early March. Since then, the price has continued its upward trajectory, inching closer to its current price of $2,382.10 per ounce as of April 19th. Numerous analysts believe that gold could potentially witness a substantial increase in value, with some even suggesting a 7- to 8-fold rise from its current value. This belief is firmly rooted in gold's historical resilience as a form of real money, a status it has maintained for thousands of years, dating back to ancient civilizations like those of Europe and China. The underlying premise is that while fiat currencies are experiencing a decline in value, gold remains relatively stable. Alasdair underscores the parallels between the current state of fiat currency, particularly the dollar, and past instances of currency devaluation. He emphasizes the necessity of a return to a gold standard to provide a stable anchor for currency value. Let's get back to the interview.
Every fiat currency has died in history. It's gone. Gold has continued to be real money from, well, ancient times. I mean, certainly the basis of it was the 12 tables, the first effort of Roman law way back in 448 BC. So we're talking about 2,500 years of gold being money, and it's written into the law of every European nation and every nation that the Europeans colonized, including the whole of North and South America, including the whole of Africa, including the whole of Europe itself. It is a Christian thing. The Chinese went a different route. I mean, I don't know anything about Chinese law, but I understand, and you might be able to confirm this or deny it, but I understand the Chinese word for money is gold. It's the same word. So, that is money. Now, the point is that money is there. It's this fiat credit that's going down. So if you want to call it the value of fiat currency expressed in gold, then it might appear that gold rises 5, 10, 20, 100 times, 1,000 times, 1,000,000 times. It really doesn't matter, because what's happening is the currency is going down. And that is the message I want to get over. Understand. Just imagine, you're in Germany between 1922 and 1923. You find that prices are going up, and you think prices are going up, and you think, this is terrible, prices are going up. You don't sort of, stop and think, actually what's happening is that your paper mark is going down through the floor. It's the same situation today, exactly the same situation today. And there you ended up with, something simple like a loaf of bread would cost you $1 billion marks, a billion paper marks. So in theory, I can see this happening with the dollar. We just hope that at some stage in this calamity, everybody wakes up and thinks, God almighty, we got to do something about this. We have got to anchor the value of credit to gold. Anchor the dollar to gold. Bring back the gold standard. But the problem, Patrick, is that, they have convinced themselves so much that the dollar is king and, gold is a pet rock, that there's got to be a re-education process. And that's going to slow things down. If the speed of the collapse is anything like I think it could be, then this is going to be a real catastrophe. And I think anyone sort of vaguely saying, 7 times, 10 times, whatever, has actually got completely the wrong end of the stick and ought to understand precisely what's happening.
Gold, of course, is rising and will continue to rise, driven by the inherent weakness of the dollar, regardless of its relative strength. As a result of these ongoing dynamics, gold is poised to maintain its upward trajectory. This trend is driven by the inherent weakness of the US dollar, which persists irrespective of its relative strength in the currency markets. As such, investors are likely to increasingly turn to gold as a hedge against currency devaluation and economic uncertainty. Where are prices heading next? Do tell us in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.